You're listening to Smart Metals Radio from the Hard Assets Alliance.
Hello and welcome to the Smart Metals Radio Show from the Hard Assets Alliance with me, your host, Andy Duncan. My special guest today is David Morgan, editor of The Silver Investor and publisher of the Morgan Report. Today we'll be speaking about when's a good time to sell gold, why silver might be a better investment than gold, and what's going to happen to silver in the next few months. Hello, David.
Andy, thank you for having me on your show.
Great stuff. In your latest blog piece on silverinvestor.com, you warned that silver, gold and miners may be about to sell off again. Do you think that now may be a good time to get out of gold for a while? And if so, when do you think it might be a good time to get back in again?
Actually, I don't. I think if you're in the market now and have held, from whatever level to this level, to try and capture the very bottom, I think it's an amateur's attitude. So personally and professionally, I think the best thing to do is, one, if you are not in the market, you might want to average in over the next few months. And hopefully during that averaging process, you'll catch the bottom or very close to it, because it presumes that there's a lower low coming. And that presumption will be proven true or false. So I would not sell anything. I would hold and make this exception. And that is that not giving tax advice to anybody, but obviously depending on your jurisdiction, a lot of people will be selling for tax loss purposes. And this will make some of these great bargains out there that are available in the mining equities even more juicy, so to speak, meaning they'll be so undervalued. I mean, some of these companies are selling for less than their cash on their balance sheets. So, I mean, if that isn't a deal, if you can buy 10 cents for a nickel, I mean, that's a pretty safe investment. So I would say, use your head. Don't try and pick a bottom. We have either bottomed or bottoming, and I think it's going to be a process over the next few months. So hopefully that was a clear enough answer for you.
And how long do you think this bottom is going to last? Will it go down to as low as 1,000 or even lower? Or when do you think it's going to start climbing up?
Oh, great question. And of course, this is what I think, doesn't mean it's true. First of all, I was asked today, actually, about, me being pretty strong about silver already putting in a bottom. And that was on the 28th of June on what's called a key reversal, where it touched 1817 intraday, probably only traded one or two contracts at that level, shot back up through the day and closed at over $20. So it was almost a $2 move in one day from bottom to top. Very unusual. They're called key reversals for a reason. It's when you hit a new low and you close at a new high relative to the previous day. It's also called an encompassing candle. I forget the exact name, but it's an encompassing something. So that took place, and since that time until now, we have been above that level. So this has built a pretty good base for silver. So my idea is that silver may have already bottomed and gold may hit a new, intermediate low, meaning it could get below the 1179 that we've already seen. In fact, if you pushed me hard and said, what do you think could happen, that would be it. I think we could actually see silver hold above that level while gold breaks or breaches the low that it hit approximately in the same time frame. Regardless, if we get down to 1,000, all that means is it's a number. It's not one that makes gold bugs or gold investors happy. It would still maintain the long-term uptrend, and there would be nothing that would shake me fundamentally from being in the market. So again, it's something that people have to, and professionals or retail investors have to take into account, what their goals are, what their time frames are. I think we've got, Andy, something along the lines of maybe a couple more months. I think we've got a sell-off until the end of the year, which accounts for about 5 weeks. I think going into early January, there'll be sort of some fishing around, so to speak, meaning that it'll be kind of a sideways market. And I think by about the third week of January or so, maybe early February, you'll see some strength in the market, although it'll be at low prices, but volumes will increase, prices will stable and start to move up slightly, and then through the rest of that month in March and probably into April, you'll see some strength in this market.
Now, you recently compared gold to real estate because after years of going up, lots of people sort of came to believe it could only go up, just like they thought property could only go up. Now, we saw gold get to $1,900 and a few dollars over that. Do you think it's going to be several years before we see 1,900 again? Or could there be some kind of rush which might happen, which could put it up to 1,900, 2,000 much quicker than that?
Well, I answer yes to both questions, and I'm not trying to be cute. I think if things proceed as they are currently, meaning there's no anomalies out there that really shocks the investment world where there's a bad rush into gold and silver, that you'll probably see, the 1550 level in gold breach the upside next year, which is the critical level that it broke down through. And that equates to $26 in silver. So I think both of those levels will be achieved on the upside in 2014. And where we go from there, gold, I think, will get to the 1900 mark that you outlined before silver gets back to the $48 level. So I anticipate gold reaching the 1900 and change probably in 2015, whereas silver could make it. It could actually make it earlier, but I don't think so. I think we're going to see gold sort of lead the way up and make the $1,900 level in 2015. And once you break through the new high, whenever that is, then there'll be a lot more participation in the market. And of course, there'll be more participation as prices, come off the bottom, wherever that is. But once you get in a new high, as odd as it sounds, there's nothing more bullish than a new high, especially in the commodities markets. The reason being, one, they're leveraged, and two, anyone that trades professionally knows that there's what's called no upside resistance. What it means is that everyone that holds a contract or holds it physically in the real world has a profit. And when people have a profit, they start to get greedy. So they don't know how high is high. And I used to make that statement a lot when silver was going up through 30, 35, 40, when we had that massive run from 19 to 26, stalled out at 26, broke through and went all the way up to 48 during the QE2 announcement. So we'll see something similar again. And a lot of the professional money that knows psychology and knows how markets move will look for that breakout to the upside. And you'll see massive amounts of probably hot money, meaning they're there for a short time, but there'll be a lot of it pushing into the market. So it's really difficult to say, when. What you really want to do is kind of plan ahead. In other words, you'd rather be in the market before that happens, unless you're a very nimble trader. I'm not going to tell anyone how to trade, but what you'll see is that you'll see a lot of emphasis into that market. And again, a lot of that money will be new money that's there for a short time to make a quick profit.
Now, you just sort of intimated there that silver might be a bit slower off the mark than gold. Now, you're well known in many quarters as the silver guru. Do you think in the longer term, silver is the better investment than gold?
I do in a longer term, and the reason being is that if you use several metrics, one of the most noted is the USGS, United States Geological Survey, basically states that the amount of silver in the ground that's economic at this point is probably good for another 10 years or so. And you can conclude, others have concluded, I should say, that it could be the first metal to go extinct. Now, I put extinct in quotation marks. It's never going extinct. But what it means is that we're, at a peak silver period. So if you have a time frame for your children or grandchildren of, say, a 30, 40, 50-year investment time frame, I think silver would really be one to consider for a very long time frame. Regardless, most markets go, undervalued to fair value to overvalued. And I think that was one of your questions coming up. But we will see these markets overvalued at some point.
Do you think then that before this kind of grand global Keynesian experiment is over, we might even see Max Kaiser's target hit of $500 an ounce for silver?
I don't rule out anything these days. If you go back into the Hunt brother days, and I actually know some of the people associated with Bunker Hunt, his belief was that the true ratio was 5-to-1. So not meaning that will ever happen. All I'm saying is pretty studied in the silver market. And so when silver did hit about a 16-to-1 ratio at the peak in early 1980, you could make the conjecture that silver could do even better than that. So you could pick a price of gold of, say, 5,000. There's many proponents of that number, and say 1/10 of 5,000 is 500. Silver could reach 500. I emphasize the word could. What I'm more interested in, rather than the paper price, is what is the real value. And I think Mike Maloney probably does the best educating the public of that idea, which is, does an ounce of gold buy the Dow Jones Industrial Average? Does an ounce of gold buy, this much of an automobile? Does an ounce of gold, or you could say an ounce of silver, does an ounce of silver buy, this part of an apartment complex, or this many shares of the Dow, or whatever? So that's the way really to value these metals, not so much in the paper price, although not to say that people won't be looking at that, they will, but it's what does that ounce of either metal purchase relative to its historic mean. If its historic mean for gold is an ounce is equal to a fine man's suit, shoes, hat, umbrella, etc., and you could buy 10, then I would suggest that gold is overvalued by its historic mean. And the same thing for silver. So that's what I'll be looking for more than the price. Obviously, the price will be something, again, that we'll be looking at. But in a fiat system, you can get to, crazy prices, because at some point they could, not necessarily would, but could become almost meaningless.
Now, silver historically has mean reverted around 15-1 against gold. So with silver currently hovering around $20 an ounce, which adjusted for fiat paper inflation is a remarkably low price, if we use that 15-1 figure, that would mean silver should be $80 at the moment. Now, we've spoken about silver in the long term. What do you think silver is going to do over, say, the next 6 months to 12 months?
I think silver will work its way back over the $26 level. And once it's accomplished that, then it'll take some tough slugging, I'll call it, to move into the 30s, 31, 32, 33. Once we build a base probably in that region, what you'll see is, a lot more interest in silver again. There'll be a lot more, positive commentary. A lot of people will come out and, advocate owning silver as an investment again, that type of thing. And it's going to take work. I think there's a lot of overhead resistance in the silver market, not only in the paper markets, but also in the physical market. So you will see, as we work our way above that level, above the low 30s into the mid to upper 30s, there'll be several people out there that have held for 3 years at higher prices, such as, say, 35, that will see silver finally make it back to 35. And they'll say, I wish I never heard the word silver. David Morgan is, blank, blank, blank. And they'll have other comments for other commentators. And they'll sell. And they'll sell to, quote, unquote, break even. And that silver will come back onto the marketplace. So that overhead resistance takes time to get through. Once that is accomplished, then you'll be able to see it start moving up and take out its, the $48 region. But that, I think, again, will take more effort than you'll see in the gold market. The gold market is much more establishment oriented. There's much larger purchases from, pension funds, hedge funds, managed money, and that type of thing. And the public is generally in the silver market. There's some, professionals in the silver market. There's no doubt about that. But relatively speaking, it pales size-wise to the amount of, professionals in the gold market. So gold has more of a steady Eddie approach, as you said in the beginning of this. We saw, gold basically move year over year higher and higher for, over a decade. And now that it's had a bad year, people, a lot of them are kind of giving up on gold. Whereas, it's sort of funny. It is funny to me, but, it is and it isn't. It's humorous from the aspect that no one that's professional or even non-professional but has a common sense attitude expects any investment to continually go up forever. It just doesn't happen. But the gold community, and I'm part of it, seem to think, well, the fundamentals are so strong that it portends that it will continue to go up. And, of course, real estate investors believe the same thing, and tech stock investors believe the same thing. And, there's always this, well, it's different this time, and all of that stuff. But all these arguments, manipulated market or not, the market is the market. And what we're seeing now, I think, is normal corrective behavior within a massive bull market, and I don't think it's over.
Everyone's given up on gold and silver except all of the Chinese and all of the Indians and everyone like you and me. Now, before we finish, I loved your recent phrase that if you're yelling, we should be selling. What's your opinion on the upcoming installation of Janet Yellen at the Federal Reserve?
Well, we're going to do an update report on that in the Morgan Report for January. But she is a very dovish. Her belief system she is basically, she calls herself or alludes to the fact she's a new Keynesian. She's got such radical ideas of like having bank reserves. I wouldn't say tax, but bank reserves would have to be, moved out, or they're going to lose interest on them, which would, make the banks loan money out into the system. So she's got some pretty interesting ideas about money and money flow and inflation and what the consequences thereof can and cannot be. Very contradictory to an Austrian such as myself. Yet, sort of along the lines of this Abenomics that's going on in Japan, where, they've got this target to like double the inflation rate and double the money supply. I mean, anyone from any monetary background that's, looked at some of the stuff through history. I mean, there's a book on my bookshelf called The Penniless Billionaires. I mean, to think that that's sound economic policy, to want to double the money supply in a 2-year time frame, that's insanity. And yet this is in the public domain. This is something that is considered, quote unquote, good economic policy. It's going to get Japan out of this, 20-year doldrums that they've had in this deflationary spiral. Very interesting times. I think shows like yours are very much needed. You need to get different points of view, different perspectives. But I think this, alternative way of thinking needs to reach as many people as possible, because a lot of people blindly follow the leadership that they know what they're doing, or the institutions have it all under control, when that is not the case at all.
The lesson of history and of Austrian economics is that all fiat currency systems eventually fail. What's the longest time you think the paper dollar can keep going before it gets replaced by something else?
Great question. And boy, this is the one where you can really get egg on your face, because, you want to be right. You don't want to mislead anybody. My economic wherewithal depends partly on it being a correct answer. What we know from history is that 40 years is about the average. We went off the gold standard internationally in August 15th, 1971. We're in about a 44-year experiment. Personally, I'll just be consistent, Andy. What I've said is I doubt we can go about 2 more years. I think we'll see 2014 and 15 work our way higher in the metals. And I think 2016 to 17 is going to be the blow-off phase, where not the majority. It won't be the majority. There'll be, instead of maybe 1% of the people realizing what's really going on, to perhaps 2% of the people realizing what's really going on. But 2% from 1% is a doubling of the amount of people that have an insatiable amount desire for real money, for people that want to preserve what they have worked for or protect what they have. And so this would be a huge increase in the velocity of paper money moving into real assets. And that's what I see. So I would say at the outside, 5 at the most. I just don't see it going more than a couple more, really. But, my mentor and most respected, Harry Browne, who ran as a Libertarian presidential candidate twice, told me in a conversation over dinner one time, this thing could muddle on a lot longer than you believe. And so I've always taken those words to heart. But I really think just a few more years is about the best that they can pull off.
Always reminds me of that Keynes quote about, you could lose your money faster than the market retains its rationality. Anyway, it's been great speaking to you today, David. Where can our listeners find out more about your investment services?
Well, Andy, there's several places. I think the best ones I'll talk about are for free. I have a YouTube channel, which is Silver Guru. I have a Twitter feed, which is @SilverGuru22. If you go to the website, themorganreport.com, and pull down the left-hand window, there's a free e-letter that comes out every weekend. And if you're more of a serious investor, there's 3 levels of service that are described over on the right-hand side of the webpage.
Fantastic. Anyway, thank you very much for your time today, David Morgan.
Andy, thank you so much.
You can subscribe to Smart Metals Radio on iTunes, where you can also leave us reviews to help us grow this podcast. Please also contact us by visiting the hardassets.alliance.com website, where you can leave us feedback, tell us what guests you'd like us to speak to, and subscribe to our free Smart Metals newsletter. As a special offer, for anyone who wants to set up an account with the Hard Assets Alliance, we'll be waiving opening and setting up fees. Just visit hardassets.alliance.com to take advantage of this special offer. Listeners who'd like to speak to a live rep to walk through our registration process can call 1-877-727-7387. That's 1-877-727-7387. A special thank you to David Morgan today for joining us on the programme, and thank you for listening. Until next time, goodbye.
Silver123.net is a silver saver program designed to be as simple as possible. For as little as $50 per month, you can set up and create an automatic cost average buying program that will get silver or gold sent to your door on a monthly basis. The first step to creating an account is easy. You will supply some basic information. Next, you will add a bank account from which you will schedule your purchases. Scheduling purchases makes saving easy. Silver Saver is customizable and allows you to control the amount and the date of purchase. Once you are signed up, you are then given your affiliate code. Now you can save in precious metals and also market this program. You can use email, web pages, and multiple forms of social media to share the Silver Saver program. Silver Saver will reward you generously with physical silver or gold whenever someone you refer becomes a saver. Silver Saver not only provides you with a share code, but also allows you to place your own banner ad on a website of your own. Silver Saver is one of the best ways to start saving and accumulating gold or silver, especially at these levels. Visit silver123.net and start saving today.